Alright, this is a market review, Nasdaq futures, stock index futures markets. This is the Nasdaq and we're reviewing Wednesday this week, Wednesday the 7th of January 2026. On the daily chart, you can see we're looking for higher prices. On the weekly forecast, we're looking for higher prices. Monday, Tuesday, expanded higher. I've had bullish expansion. Wednesday, on trading at the opening bell and at the 8:30 open, we had not yet taken this buy side liquidity pool, so that was the target for the session. Draw on liquidities are up here at 26,123.75. On the 4-hour, we can see this 4-hour bullish order block, and we'll see price dip into it, reject and move higher. Going down to the 1-hour chart, the 1-hour arrays are to note. Yesterday there was a bullish order block on the 4-hour chart. This is that bullish 4-hour array being used yesterday. Yesterday we saw a bullish displacement of that array, which created this down close candle as another block. When price closed above this became another block. Drawing that out, we look at the mean threshold, and mean threshold quotes price. Price does not touch mean threshold of this bullish order block. It just gets close to it and does not touch it. That is extremely bullish. There's something I want to cover: how to trade launch. This candle right here was 11 a.m. New York time candle. This candle trades down into the order block, the 4-hour bullish order block, as well as this BC, and also the midnight opening price on Tuesday, and it rejects. If you look at the review we did yesterday for Tuesday's price action, you're going to find out that launch was a beautiful rally to the buy side. That rally is seen here. This is the premise for the rally. If you have not watched that review, please give it a watch. We could see the 11 a.m. candle reject the sell side, rejecting midnight opening price, 4-hour order block, and it closed above the previous hour's low. This is an extremely bullish signature. Moving into the 12 o'clock candle, we are expecting higher prices just based on that insight alone. But that insight alone is not enough. It is so powerful because we are in a bullish expansion phase. This week we're expecting bullish expansion to buy side liquidity pools, and our draw liquidity is clear here on the buy side. That is what makes this insight valuable to trade launch. Because there's a lot of questions: how could I anticipate launch trading? Is launch going to be a consolidation since the algorithm goes and reflects on price action and mimics what the traders used to do during launch in the pits where they actually went out for launch? So is it going to consolidate? Is it going to retrace? Is it going to expand? Is it going to form a continuation? The answer to that is to look at the higher time frames. The hourly chart gives insight as to what launch is going to do. Now that that's out of the way, let's return back to Wednesday's trading. This main threshold supports price, and we see price finding more support with the bodies of this candle at the midnight opening price. Dropping down to the 15-minute time frame, we can see price trading lower into a higher time frame array, which is that 1-hour mean threshold. It trades to its consequent encroachment, to its mean threshold rather, does not touch it, rejects, and starts moving higher during London launch. This type of movement here does not require us to start looking for a liquidity read at the opening bell or at the 8:30 open. The best case scenario is to see a liquidity read of pre-market lows. In today's particular example, pre-market lows is trading into this down close candle, which is a bullish order block. This move downwards did not take this previous low, so that makes this a mitigation block. This mitigation block is traded to here multiple times, and price finds support off that level, attacking the buy side. we had regular trading hours New York PM high, regular trading hours New York PM high, regular trading hours New York EM high, all from the regular trading hour chart to the left. The narrative going to the session was that we're drawing into this void portion of an old opening range gap, moving towards our drawn liquidity higher. Alright, we know that large ranges precede small ranges and vice versa. So when it's a large range day, the next day is ought to be a small range day. When it's a tight range consolidative day, the next day is supposed to be a large range day. That applies even to sessions and key time windows. We're going to see it on the lower time frame on the 5-minute chart, but just to have a view on the 15-minute candles, you can see that there was a massive rally up during the opening bell at 9:30 New York time. This move took buy side at the Asian highs, at the London highs, and this regular trading at New York PM highs. After that, we see some choppiness. There was some sort of a consolidation. Price was stalling during the silver bullet hour, and we're expecting the next move. If we have such a massive move in the opening range, we're expecting the next expansion to happen during the reversal macro or launch by ICT starts at 11:30 and ends at 1:30. That's the launch hour, which is actually 2 hours. But then we're looking for rallies after silver bullet hour. That's during launch or during the reversal macro. Why? Because we have seen a massive rally at the opening bell. Yesterday, ICT mentioned where he said if he sees delivery to subjective or an expansion during the pre-market session, where we have pre-market highs and pre-market lows, remember, if he sees a large range or a expansion during the pre-market session, he'll be waiting for the opening range to trade without him. So moving from a large range to a small range, he does not want to trade the opening range because that is going to be a small range, or is expected to be a small range. Then the next session, next key time rather, is going to be the reversal macro or the launch session. That's where we're expecting to see more expansion coming to the marketplace. Moving on to the 5-minute chart, entry on these ideas were right here on this M5 mitigation block. Price traded down, found support at the mean threshold of this 1 hour array. So we had that arrays in play. Moves above the mitigation block here. Retest to mean threshold, respected beautifully. Again, respects. Pre-market highs are posted here, pre-market lows here. There's no New York ATM model today, and that is okay because we are not expecting a liquidity raid. Price is finding support at an order block, rallying at the opening bell, retraced down to this discount wick on the 5-minute chart. It becomes sloppy, as we mentioned during the earlier parts of the silver bullet hour. At the reversal macro, we start seeing expansions from around 10:45. Price starts expanding. We're given an opportunity to get into the trade as a continuation right here on a bullish order block, a buy side imbalance, sell side inefficiency at 10:30. This is the beginning of a launch session. Traditionally, launch rallies and post is high around 12:30. From there, we see that price has arrived just before the high of this old opening range gap, which was a void. So you have to notice how price stops here. It does not hit the high. That's very significant. If price hits the high, we're expecting to see very little retracement down, and we're expecting to see more bullish expansions up. Leaving this little portion open signifies bearishness, and price begins to displace lower and retraces right down to the high of today's opening range gap. Last thing I'll touch on is this inefficiency. We see this BC being used here for support, taking us higher in conjunction with the bullish order block when price flips bearish, this leg up, this inefficiency here is inverted here. It's used as support at this point to form the mitigation block. The mitigation block is this consecutive up close candles. Now, when price trades below these consecutive up close candles with the close, we're expecting it to hit the consecutive up close candles for a sell-off. In this case, it forms this low and the rally does not get to the mitigation block. Why? Because there is an inversion of this BC here. Price is retesting this BC and selling off from it. More opportunities to pyramid on shorts here when price rallies up into this inefficiency after inverting it and it hits high of today's opening range gap. I was not interested in these shorts. I was not interested in trading the sessions here. My focus is on the buy side. I'm bullish. This is the move I'm willing to participate in. Any move like this, very probable, very possible, but with half risk since it's counter higher time frame. That is all for this review. If you found value, if you learned something, hit that like button, subscribe, and I'll see you in the next video. Stay strong.